while we are looking at all the developments that are playing out as far as the startup ecosystem is concerned, we are watching the moves that are taking place in the global markets as well. And the sectors that are really playing up as far as the fallout of this entire move towards global financial markets meltdown is concerned. We are seeing significant turmoil driven by escalating trade tensions or the economic uncertainties on the back of this. So stock markets have plunged, major indices worldwide suffering substantial losses. The S&P, NASDAQ recording their steepest decline since 2020. The Dow has dropped more than 1,000 points and the European markets have mirrored this downturn. The DAX is down 5%, CAC is off 4.2% and the FTSE has fallen 3.8% when we check last. So treasury yields have declined. Amidst the market sell-off, investors clearly are moving towards safe haven assets, and those are leading a significant drop in U.S. Treasury yields. So the 10-year yield has fallen. It's gone below 4% and reflects the heightened recession fears, the shift towards more secure investments. And look at how oil prices are moving. They're tumbling. They've declined sharply, reaching their lowest level since June 2021. And that drop is because of increased OPEC plus production, concerns over reduced global demand because of escalating trade wars, and the confluence of these factors underscoring the real fragility of the current economic landscape, with market participants closely monitoring developments and potential policy responses. So just to make sense of this meltdown right now, from New York, we're joined by Rajeev Agrawal of DoorDarshi India Fund. Rajeev, good to have you with us. These global markets seem to be in free fall. Wall Street staring at its worst week since 2022. Europe deep in the red. Recession fears back on the table. So how much worse do you think this is going to get?
Good morning, Vikram. It's great to be on your show. How bad can it get? I think nobody really knows, because a lot of these policy measures and countermeasures that we will have over the next few days and weeks will determine how bad the situation will be. Clearly, the market initially is looking at what the tariffs are, baking in the fact that from here on, there will be a lot of back and forth, and there will be a lot of uncertainty for the next few quarters at least. And reacting to that, we also know that the markets were pretty expensive coming into this sort of news in the last few weeks. And therefore, the markets have taken on some of those very high levels of valuation and started correcting. I think if the services exports from the US starts getting hit, that will be a big impact. And as we have seen, MAC 7 have been impacted badly in this particular correction. And one of the reasons could be that the services exports are now in the purview of possibly some taxes by other countries.
Indeed, trade war between US and China, that seems to have spooked investors. Now China is imposing fresh 34% retaliatory tariffs on America. Are we looking at this prolonged economic standoff continue, and how is that going to play out? Because much of this now will be factored in by the markets, don't you think?
I think these are initial shots, really. How they will play out, which is the second and third order effects, are pretty much far out right now. So we are just hearing what US is imposing and what China is imposing. But what is the implication of that? How the supply chain will get impacted, and therefore what companies and their performance will be, remains to be seen. So I think this is unlikely to get sorted in the short term. Tariffs, once you start putting in, the chain reaction can go on for a while. And I think that is really what is getting reflected in the markets right now.
Investors are fleeing equities. They're piling into American treasuries, and that's pushing the 10-year yield below 4%. Is this a signal for recession fears back now with a vengeance? And if that is true, then the kind of free fall, like you're saying, you can't imagine, right?
Absolutely. I think the problem is that if you put tariffs, then the goods and services become expensive for the corresponding consumers. If also because of that you're not producing enough because there is not enough demand, then the employment goes down. And to your point, all of that could lead to a recession. I think treasuries are falling because in general, or treasuries are rising, or the yields are falling because in general, investors run away from risky assets, and that's what we are seeing. But I think it's too quick or too early for us to say whether we will have a recession. I think it remains to be seen how the subsequent policy measures are, which will tell us how the economy will behave in the US and in Europe.
Crude prices crashing now to their lowest level since the middle of 2021, Rajeev. This is again thanks to the tariff policies of Trump and OPEC plus as well, now boosting supply. So do you see that playing out in a way that we could see a further slide? Or do you think a rebound is likely because these lower oil prices, they're typically good news for importing economies like India?
Absolutely. So I think oil prices are coming down for multiple reasons. One, obviously, is there's more supply. OPEC is doing more. US, with Trump coming in, has promised that he will be encouraging the supplies from the US. That is another reason. And of course, as the economy slows down, the demand comes down. So more supply, less demand, clearly the prices will correct. Now, from an India perspective, I think India being such a huge importer of oil, it's a huge positive for India. But that positive is also getting offset by a lot of other factors that we are seeing in terms of how the world economy will do and therefore what India will do. But clearly, oil prices coming down is always a positive news for India, given how much of imports India does on oil.
Rajeev, I'm wondering, looking at the kind of play that is currently in the equities globally, how do you think India is going to do? Do you think India could outperform global markets this year with everything that is playing out, or what could?
Yeah, so I think one thing I would say is Indian domestic economy is doing relatively all right. I was hearing earlier Mr. Pai talking about how the deregulation needs to be done, more deregulation needs to be done. And I think in India, what we have seen with the new RBI governor coming in, he has definitely improved liquidity. He has tried to make things a little bit easier for the banks and so on. And I think that's quite positive because in the past, credit was becoming very tight. So I do think the Indian economy is in a good spot. The challenge, of course, is for the export-oriented segments, which may get impacted because of the tariffs and also how the world economy does. And so I'm of the opinion that Indian equities were not necessarily cheap coming into 2025, and there has been a correction over the last few months. But given where they stand right now, given how the economy is expected to do over the next few quarters, I would think that it will be much more stock specific. So there are some stocks which are very reasonably priced, especially on the financial side, which, as you would know, that we run a fund which invests in Indian equities. So on the financial side, we still like a lot of stocks just because they were beaten down a lot. And given the policy measures that the government has come up with and RBI has come up with, we think there's a decent amount of opportunity there. But I would not say the same for many other segments, which still are pretty expensively valued.
You still think that the valuations are high as far as the Indian sectors are concerned, and if you look at financials, those seem to be a good play right now. It's good to put that in context, even as we're seeing the rhetoric getting played up, because after China's move with retaliatory tariffs, now Trump has come on board and said that China has panicked, and he says China has played it wrong. So if you go by the rhetoric, there is no de-escalation of these trade wars right now, these tariff tremors that are playing out. It seems like we have this long game ahead of us, and we'll see how the equity markets react. But Rajeev, thank you very much. It's been an insightful discussion. Clearly, markets are on edge, risks are high, investors are scrambling for direction. We are watching closely to see how this unfolds in the weeks ahead. But for the moment, it's time for me to wrap up this edition of India Tonight. We'll keep you posted on all the big developments. And of course, we'll be back with Business at 9 p.m. sharp right here on ET Now. Do stay with us.